We begin with the Federal Reserve, which appears to be on track to raise interest rates sometime this year. Chair Janet Yellen provided only faint clues. She didn't say when, and she didn't say by how much. But the central bank did upgrade its view of the economy, everything from housing to consumer spending. Stocks rose as Yellen spoke at the news conference this afternoon. The Dow Jones Industrial Average rose 31 points to close at 17,935. The Nasdaq 9 points higher, and the S&P 500 rose 4 points. Yields, or interest rates, meantime, turned lower with the 10-year note at 2.3%. Hampton Pearson has more on what Ms. Yellen said about the first potential rate hike in nearly a decade.
Federal Reserve monetary policymakers see an economy that has recovered since the beginning of the year, but it wants to see stronger gains in the job market and higher inflation before raising interest rates for the first time in 9 years.
The committee continues to judge that the first increase in the federal funds rate will be appropriate when it is seen further improvement in the labor market and is reasonably confident that inflation will move back to its 2% objective over the medium term. At our meeting that ended today, the committee concluded that these conditions have not yet been achieved.
While the Fed gave no timetable for a rate hike, all but 2 of 17 policymakers think the central bank will raise key short-term rates sometime this year, with the first hike coming most likely in September.
On the one hand, waiting too long to begin normalization can risk significantly overshooting our inflation objective, given the lags in the operation of monetary policy. And on the other hand, beginning too early could risk derailing a recovery that we've worked for a very long time to try to achieve. And so we're trying to assess those risks.
Beyond job growth, the Fed still sees inflation as too low, which in the long run holds back economic growth. Business investment has slowed due to declining energy prices. American exports have become more expensive because of the rising value of the dollar, all impacting the timing of that rate hike. In hopes of preparing investors and heading off market volatility, the Fed chairman emphasized whenever those rate hikes begin, they'll happen gradually, depending on future economic data. For Nightly Business Report, I'm Hampton Pearson in Washington.